So you recently raised your price target from 250 to 300.
Yeah, it's a very dynamic model in that it uses what we call mean reversion, essentially a moving average, an all-time moving average of the price of Bitcoin. And if you do that, it's hit every single top that Bitcoin's experienced in its 12-year history. It follows a particular trajectory, and to get a target, you kind of have to get an idea of where the top will be when it will hit that. That model is looking like it is shooting for 300 to 400, even higher. It just really depends how the price action of Bitcoin acts over the next half of the year. Typically, in all past cycles, we've seen Bitcoin top out around the December, at least the fourth quarter of the year after the halvening. Bitcoin is like this asset that's very, very much locked into an algorithm where every 4 years we have a halvening, where the inflation rate of the new coins minted into the supply gets halved, and that creates this reduction in sale pressure by 1/2. Essentially, that gives us a little shove on the price. If you've got half the amount of sell power from new coins being mined, you get a bullish impulse. In all the past cycles, it seems that bullish impulse manifests into this crazy run-up. The last one was 2017. Took us from $1,000 to $20,000. Tends to peter out around the fourth quarter, around December. So ballparking December, that top cap model of mine, it could be anywhere in the 300,000 to 400,000 range. It might even go higher, but we need to see how it performs over the next 6 months. We're seeing currently an unprecedented supply shock. So normally you see this kind of depletion in inventory on spot exchanges as essentially like the long-term buyers come in and accumulate and move those coins into cold storage. And this kind of buyer is kind of the smart money buyer that buys in early before the price starts rocketing. When you take a lot of the supply out of the market, it does rocket up, and that happened in 2017 in the sort of $1,000 to $2,500 band before we rocketed up to 20,000 in the following 3 quarters of 2017. And that depletion of the smart money coming in, that lasted no more than 5 months. And like this time we're at, what is it? I don't know, is it 13 months already? It's just so much coins are being scooped off the exchanges. And I work with Glassnode, who do a lot of the on-chain metrics, and they've got a metric where we look at the wallets on the exchanges. Wallets on the network, and we cluster them and we figure out essentially who are the different participants. And we look at them and we go, is this person a highly liquid person who seems to buy and sell? And then we have what I call the Rick Assleys of this world, who buy their Bitcoins and will never let it down. They just keep buying and buying without much history of selling. Very similar to that supply shock we're seeing of coins moving off the exchanges. We're seeing these Rick Astley genre of accumulators, of investors that are buying and holding. They're coming in very strong. So we're seeing a net flow of coins from participants that have been traditionally more or less speculating or buying over the short term and then selling. Maybe they are like traders that trade in and out of altcoins, but essentially these new people, the Rick Astleys, are coming in and they're just buying and locking up the coins. And so that's been a very big driver of this bull market, that there's been strong buying. And even we can measure the size of the purchases and the movement of that capital. A lot of the conversation has been about institutional investors. That's true, but also I'm thinking that there's a lot of high net worth investors coming in here, coming to buy in slugs of $1 million at a time. And we saw that very strong in the sort of first 2 months of 2021. So yeah, I think it's these guys, institutions, the high net worth guys that are coming in and scooping that up. they tend to store into cold storage wallets, which are very visible on chain. Whereas retail, they're just starting to come in the last 2 to 3 weeks. A lot of retail numbers are going up. Retail tends to store their coins on exchanges like the Coinbases of this world. That's less visible on the blockchain, obviously, because they don't take it off the exchanges. But we are seeing a lot of numbers climb lately with more retail type investors. I don't think anyone would have guessed that this cycle would be ripping up so quickly. And I know a lot of the technical traders have been like, this is overbought, and it's just been on the red line consistently until the last I guess month and a half. And my approach really is like, we got all these models. For starters, if you're trading the model, I remember 2017, we hit like $10,000 and everyone said, this is the top. And I look at the back trace and I look at the on-chain analysis of it, and it could have been a top. It was touch and go. And then it ripped and doubled. It doubled to 20,000 in a matter of weeks. And so everyone's got this plan, beautiful plan. I get people asking me, can you let me know when we get within 25% of the top? We went from 10,000 to 20,000 in 2 weeks. And every day, the price is running up thousands of dollars, and you think, can I have a nice warning 25% of the way to the top? And the whole thing is mayhem. And so when you're in that mania phase of the market, anything can happen. The fundamentals have gone out the window and it's just highly speculative. You'll see the price rise way above what on-chain valuations will give it.